All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the S&P tested the 22 to 25 area, which was the bottom of the short-term balance, and a key support area that we discussed on Friday. And we expected a pretty decent buy response there if price got there on Friday. Ended up getting there in the overnight session, and we did indeed get a pretty strong bounce back up to the 44.75 to 46.75 zone, which was identified as a key inflection point in the market for an upside move. So at this point, we've already hit the downside target, the big support zone below. We've already gotten a pretty strong upside move. We're bouncing ahead of that resistance zone. So our short-term bias is neutral for that reason, because that resistance is valid until it's been taken out. So in the overnight session, we know that we've seen a lot of short-term strength, and we have the overnight breakout area, 37 quarter, 38.75, and as long as we hold above that, then buyers have a chance at breaking above the resistance zone and then going higher and testing 50 quarter to 52 quarter, and then 55 quarter to 57 quarter. Both of those zones at that point would be the upside objectives on a breakout above initial resistance. So that's the upside scenario. In the event that we hold above pre-market support, above the prior VPOC at 40.5, just continue balancing and then break out above initial resistance, we can expect, about a 10 to 11 point push higher. Now, that doesn't mean that we can't get rotation along the way, but if we get a breakout, then it's pretty likely that we're going to go up to 55 quarter to 57 quarter before we see any decent sell response in the market. So that zone in the middle, it's a good spot perhaps to take some profit, and we could still get sellers there, but the high odds target where sellers would really enter and press is the 55 quarter to 57 quarter. So we'll just keep both of those resistance zones above in mind in the event that we get a breakout. Now, on the downside, if we just balance here, above 40.5 or above the pre-market support and then start breaking lower, we could push all the way down to initial support, 29 quarter to 31 quarter, before we get any decent upside rotation. And that's why in today's trade plan I mentioned that the 33 to 35 area, that's an area where we're going to have to gauge the market strength in real time in order to use it as an entry on any long setups, because that area might end up being just a better reference point to let us know whether the market is strong or weak, and might not provide us with the best entry. So that's something that's going to require some market reads in real time to determine whether the 33 to 35 makes sense. So how price gets there is really going to be a big factor, and how the internals are looking and what kind of momentum we're seeing. All that is going to play into it. Because we might just balance around the 33 to 35. Initial support 29 quarter to 31 quarter. If we go there in a way where the short-term price action is exhausted heading into that zone, then that's a place we can consider a long setup. But in order for us to hold that long, we're going to want to see the buyers push ES back above 33 to 35. If we start holding below the bull bear zone, then it might be a very short-lived bounce, and we could go lower and test the overnight lows and that bottom of the short-term balance again at 22.5 to 25.5. As long as we hold that 22.5 to 25.5, it could still be a balanced market, balanced session. If we break that zone, that would be a break below a pretty decent support zone, and that can result in some short-term liquidation. So then we'll have to be cautious on taking any long setups. But right now, heading into the day, very mixed, very neutral bias. Short-term in the overnight, we know that buyers are in control, but we're just so close to this key resistance zone that we need to be careful on initiating new longs here, right? The spot to buy was really that 22.5 to 25.5 zone in the overnight session, or even the 33 to 35 would have worked fine in the overnight session. But those were the spots where you had really good reward to risk, enough distance between the entry and the next resistance zone to justify the trade. Now the problem is that, if you're taking any longs up here, basically the only times they work out or give you good reward to risk is if we get a breakout. And if we fail, then those are going to be losing trades. So we'll be watching the S&P for a breakout, right? Because it has been balancing now at the high of Friday's range, and if it holds here, then of course the potential is there that we can go up and break through initial resistance and test the 50 to 52s and then 55 quarter to 57 quarter. So that idea is certainly in play, but we have some econ reports out today, and the first 30 minutes just have to be a bit careful, right? It's an aggressive trade. Let's put it that way. If you're taking it from here, it's an aggressive trade. Doesn't mean it can't work, but it is more aggressive. So those are really the main ideas for today. Bigger picture, we are at an important inflection point. We're either going to get a continuation to the downside here, if we break the bottom of the short-term balance. If we break initial resistance, then we'll know that perhaps the downside is now done, and we can balance, but now we can balance at higher prices, and we can slowly start making our way back up. So very important spot in the markets today, and it is an important inflection point here at the initial resistance zone, and then the 22.5 to 25.5 is very key. So let's just be prepared for the scenarios that can come out of this. So either an upside breakout or a downside move followed by balance. Those are really the two primary scenarios, and depending on how well we hold up above pre-market support and the bull bear zone, that'll help us adjust our bias on the day. So let's just keep these zones in mind, see how well the buyers hold up ES from here, and then take it from there.